What is up, people? Miles here with Keep the Change, and today we're talking about a gigantic growth stock that just dropped 20% in a matter of a day. And if you're new here, I upload stock market videos 3 times a week, once on Tuesday, once on Thursday, and once on Saturday. So remember to like and subscribe or you're gonna step on a Lego. It's gonna really hurt.
Keep the change, you filthy animal.
The stock we're talking about today is a high-growth, profitable company in an emerging market. The stock actually got destroyed last week. I think it plummeted around 20% in a day after a disastrous earnings call that I actually thought was really good, but a lot of people didn't think it was good. We'll get more into that later. The company is GAN, ticker symbol GAN. I IPO'd all the way back in May of 2020, so right when the pandemic started. Kind of a terrible time to IPO, looking at it. But hey, it. The stock is trading at around $20 a share, and it's got a market cap of around $600 million. And the stock actually doubled since its IPO price. So it started out around $300 million market cap and $10 a share. Now it's $20 a share. And that was only a few months ago. So the stock's doubled basically in a matter of months. I still see a lot of high potential for growth for this company in the future and its share price. So now I'm sure you're asking yourself this question: what does GAN actually do? And they're a provider of internet gambling software all over the world, but mainly in the US, as that's where they got around 80% of their revenue from. In 2019 alone, over 30% of all internet gambling revenue was generated on GAN software. They sell their technology to casino businesses so that they can basically run apps and have an online presence. If a casino wants to have an online presence, they're going to need a software to run it. And a lot of casinos just don't have the manpower or the time or maybe even the capital to be spending it on developing an app. So they'll just go to GAN and get it straight from them. Basically, GAN will provide you with the back-end technology you need in order to make your gambling possible on apps. So if a small casino wants to open up an app, they go to GAN, they say, hey, we want to open up this app. We don't really have the technology for it. GAN says, cool, we will give you the technology for a price. And the price is basically every time that somebody pays, GAN takes a fraction from their payment. So if someone pays $100 on the app, obviously they'd get like $1 or something from it. A lot of casinos are starting to see online gambling as a very good way to make money, especially with the pandemic striking when it did. The fact that social distancing is now here, and older people, let's be honest, tend to be gamblers more than anybody, means that online gambling is more in demand than it's ever been. And a casino needs an online presence in order to adapt to this new age of technology. Now, online gambling with actual real money is only approved in 5 states in the US at the moment, along with sports betting, but is slowly being legalized around the country. And in the next 5 years, we'll probably see full legalization, meaning that everybody in every state in the next 5 years should be able to go on their phone, play poker, play blackjack, whatever, slots, whatever, and use actual money to gamble. And these are really big industries too. I'm talking billions of dollars. With real money, online gambling, gaming being potentially worth $17 billion in the future, and online sports betting being potentially worth $13 billion once all states legalize it, which is projected to happen within the next 5 years, as we discussed earlier. And since GAN provides so much software to a lot of businesses in these industries, they could potentially make up to $500 million in revenue by 2025, which, if you're looking at it, is what the company's worth pretty much today. So it's actually not too bad of a deal when you look at it that way. In 2020, they're making around $40 million a year, so this could potentially 10 times their revenue in the next 5 years, which is really just insane if you think about it. And just to prove how much of a growth beast this company actually is, let's look at their latest earnings, which a lot of analysts did not like, as we explained earlier, but we'll get into that soon. For their Q2 earnings, which covers the months of April 2020 to the end of June 2020, they managed to grow revenues by 99%. And just to give you an idea of how insane that is, usually high growth stock company is considered like 30 to 40% revenue growth. Almost triple digit revenue growth is incredible. They made $5.7 million in the quarter for real money internet gambling. Obviously those are in the states that are legalized. They only made about $400,000 from sports gambling this quarter, and that's mainly due to the pandemic. Obviously sporting events are going to be canceled and there's not going to be just as much to bet on. Kind of expected, to be honest. So another big aspect of the business, which we haven't even touched upon yet, is simulated gaming, which is basically when you go on a casino app and you put in money and you get virtual coins. It's actually kind of nice because they can deploy this all over because technically it's legal. You know, it's not real money. You're putting in money and you're basically getting fake coins, fake currency in a way. And so you can't actually cash this money out. So you may be asking yourself, why would anyone want to do that? Which is a really good question. So let's answer that question. If you're an avid gambler, you might want to just practice gambling, but then also on top of that, you get to reap the rewards if you actually put in money. Now, what do I mean by this? Well, GAN actually has a patent that allows them to do loyalty cards offline and online. So let's say you're a casino aficionado or something, a casino connoisseur of sorts. You go to a casino, your local casino, and you get into the loyalty program. You get into the rewards program. Basically, what GAN can do is they can make it so they track your actual card, your loyalty card, and then they can apply it to online. Let's say you buy $10 worth of online simulated gaming, and you get rewarded with points. You might get rewarded with a free hotel stay. You might get rewarded with free drinks, whatever the case may be. It incentivizes you to keep on playing and keep spending money so that you can reap rewards in real life and so that you can practice gambling simultaneously while you're reaping those rewards. So it's a really interesting business model, actually. One of my absolute favorite parts of this company is how profitable they are, despite growing revenues at astronomical rates. Q1 of 2020, they had $500,000 in net income, which doesn't sound like a lot, but you've got to take a lot of things into account here. For a company that's growing revenues at almost 100%, the fact it's profitable at all is amazing. See, a lot of high growth stocks in the market, and I've seen a lot, will sacrifice profitability for the fact that they're actually growing revenues. You know, profits, they're coming way down the line, way down. You're fine. Just worry about the revenue growth. But no, this company's actually different. They're growing revenues at an astonishing rate, but then on top of that, they're still having profits, which is amazing. I mean, if you look at a stock like Uber, the revenues are growing at good rates, like 20 to 30% a year, but they're losing billions in cash. So the fact that this small company can even turn a profit is really impressive. If the revenue rates go to where we think they're going to go, I mean, the profits could be insane in the coming years. They could be insane. Also, coupled up with the fact that they have a great balance sheet with over $63 million in cash and no debt. So they're going to be good for a while. And a good balance sheet is especially important in a time like this where we're pretty much in a recession. I mean, let's call it what it is. You want cash on that balance sheet so that you can stay safe, you can stay comfortable, and you can pay off all your liabilities and not go bankrupt. I absolutely loved these earnings. I thought they actually showed steps in the right direction. They showed revenue growth. They showed average revenue per daily user climbing up, which is something you really want to see. That's a big thing that got Facebook really popular, is the fact that not only are more people going to join the platform, but they can make more money and monetize them more efficiently. But, of course, the stock went down 20% after they announced the earnings. So what was the big deal? Why did analysts get so mad? Why did retail investors sell off and get scared about this stock? Well, in Q2, GAN managed to lose $8.8 million. And you may be saying to yourself, Miles, you're an absolute idiot. You said this company's profitable. What is wrong with you? But I really like your haircut, by the way. It's dope. First off, thanks, okay? I thought you would never notice, so I appreciate it. Second off, you gotta actually read deeper into this. The only reason that they lost $8.8 million is because of one-time expenses. So basically, if you remove those one-time expenses, the company would have actually been break even for the quarter, and analysts were expecting them to lose 1 cent per share. So they would have been at 0 cents per share, which is break even, but still, that's a lot better than losing 8.8 million. In reality, they lost nothing. The number just looks a lot worse than it was because of one-time IPO related costs. The second reason that the stock went down is that they didn't raise guidance for the year. If you're new to the stock market, you might not be familiar with this terminology, but basically guidance is when a company says, hey, this is how much we're going to make this year. And for a growth stock, you really want to see them upping guidance. You want to see them every quarter coming in and saying, hey guys, we're actually going to make way more money than we thought this year. Of course, GAN this quarter pretty much just reaffirmed their guidance. Last quarter they said we're going to make $40 million this year, and This quarter came around and they said, we're going to make 40 million. So a lot of analysts were pricing in the fact that they probably were going to up guidance. They thought they were going to up it to like $45 million or around that. But GAN didn't actually include something in their guidance, which is going to be very big for them, which is the fact that Michigan is actually opening real money gaming. So they're opening it by Q4 of 2020. And GAN hopes to launch at least 3 new clients apps in Michigan by Q4 2020. Now, basically, they don't know how it's going to shake out. It could be Q4 2020 or it could be Q1 2021. So they just wanted to play it on the safe side. But basically what this means is that worst case scenario, Michigan and their apps come out in Q1 2021. Obviously not help their revenues for this year, but it also wouldn't hurt them either because they already played it on the safe side. So worst case scenario, they're going to make just as much as they told you they were going to make. In best case scenario, they're going to make more because they didn't bake it into their guidance. That was just something they mentioned on the earnings call, which is why I always stress that you should really look into earnings yourself and not just read the headlines. Of course, this all depends on whether or not, they manage to get their apps out on time, but we'll just have to see how that goes. And the very last thing that people kind of had a bad taste in their mouth about this earnings was the fact that GAN lost Dan Fuel as a partner. Now, it's sort of a clickbaity sort of thing, but stick with me here. FanDuel makes up around 46% of GAN's revenue, at least last year they did, and their sports segment made up around 10% of the revenue last year in 2019 and made up around $3 million a year for them. And basically FanDuel, I don't know how the pronounce that, FanDuel basically came out and said that they're not going to be using GAN anymore after August 31st, 2020, but only for their sports betting. FanDuel is trying to make their own software system without GAN, but here's the thing, is that it was only 10% of their revenue last year, only $3 million. This year's sports betting, it was kind of already, down the drain, if we're going to be honest. I don't really see how it's that much of missed revenue. Also, the thing that a lot of analysts didn't want to, admit was the fact that GAN only lost them in sports betting. They didn't lose them in real money gaming or in simulated gaming, so that's actually not as bad as it seems, although it does sound bad. Really, I guess the line of thinking here is that, if they leave the sports betting, what if they leave the real money betting? What if they leave the simulated betting? But I think in reality, it's very hard to make an entire platform, an entire software. So I think right now they're just trying to focus on sports. And then on top of that, it's kind of a double-edged sword, right? Because GAN now has more time to pursue new clients in sports betting. And actually, that's another point that they brought up, is that they signed up 3 clients for Michigan with sports betting. It's not like that FanDuel is their only client. They're going and reaching out and getting more, which is also another reason that I really like this company. The management team is just super proactive. And regardless, sports betting is really not going to be into the full swing of things, probably until 2021, back when, NFL regulates and NBA's around. They're around, but not to the extent that they could be. I will say, though, this is probably the worst part of the earnings call for me. We'll see in the future. If they start losing more clients, obviously that's a very bad sign. That means that something's wrong with their platform. But I think this is kind of a one-time thing. We'll see where that goes. But all in all, guys, this stock just seems amazing to me. I mean, a $600 million market cap or $1 billion industry that they could potentially dominate sounds pretty good to me, Overall, I see a unique company with an interesting position in the gambling industry, considering the fact that they're not even operating, they're selling software, so it's not even like they're a gambling stock. I mean, really they're a technology stock, but they're just kind of in the gambling sector. Overall, I see a really interesting opportunity. I think the stock could easily triple within the next 5 years, if not, even more than that. We'll just have to wait and see. This stock could easily be worth $2 billion. I could see it happening, to be honest. So that's my opinion on GAN stock. Hope you guys enjoyed the video. I love you. Thanks for watching.